In a market this confusing, there's really only one question that matters. Where's the smart money actually going? Well, today, we're going to follow that trail. We're going to connect the dots between three huge forces that are quietly reshaping your entire financial world.
Okay, let's get right into it. The whole reason we're here today is because of one simple fact. Smart money is on the move. And to really get a grip on where it's headed, you have to understand the interplay between three key things: interest rates, the US dollar, and, you guessed it, Bitcoin.
So let's start with the big one, the idea that's driving pretty much everything else right now. It's this new reality the market is waking up to. The fact that interest rates are probably going to stay higher for a lot longer than anybody first thought.
Yeah, this really lays out the tightrope that central banks, like the Fed in the US and the Bank of England in the UK, are walking right now. Look, inflation is cooling off, which is great, but it's not going down nearly as fast as they'd like. Their absolute biggest nightmare is cutting rates too soon, only for inflation to just roar back to life. And the result of that fear? Well, it's this high-stakes waiting game.
Right, so central banks are playing this waiting game. But what does this whole higher for longer thing actually mean for your money, for your investments, for the economy as a whole?
Well, it creates this chain reaction, right? When it costs more to borrow money, people and companies naturally spend less. That puts the brakes on growth assets like stocks and crypto. They tend to feel the pressure. And all of a sudden, just holding cash or bonds looks pretty attractive because you're getting a decent, safe return. This whole period is a real test of an investor's patience. But, and this is interesting, there's one asset that's been quietly winning in this environment. We'll get to that.
Now, this higher-for-longer world creates this powerful, almost magnetic pull towards one thing in particular, the US dollar.
And the logic here is actually pretty simple. When US interest rates are higher than rates in other big economies, global investors have a huge incentive to just park their money in US dollars to get that better return. And then you add in a little global uncertainty, and that effect gets even stronger, because the dollar is also seen as a safe haven. It's a classic flight to both safety and yield.
Now this is a pattern that smart investors watch like a hawk. It is not a guarantee, nothing ever is, but history shows us again and again that when the dollar's strength finally hits its peak, it's often a signal that the worst might be over for those riskier assets like commodities and Bitcoin. It's a really crucial timing signal.
So, you'd think that with a super strong dollar, an asset like Bitcoin would be under some serious pressure. And yeah, the price has definitely been all over the place. But if you look just below the surface, something really different and frankly fascinating is happening. A period of quiet, steady accumulation.
This chart really tells the whole story. I mean, just look at the weekly flows into these new US spot Bitcoin ETFs. Forget about the daily price swings and all the market noise for a second. The bars show a really clear pattern, a steady, persistent flow of capital in. Week after week, we're talking billions of dollars consistently moving into these products.
And here is why this is so important. This isn't the hype-driven retail money that chases a price that's already skyrocketing. Now, these flows are institutions. We're talking pension funds, asset managers, and they're using these new, regulated ETFs to methodically buy the dips. This is the very definition of slow, patient, smart money. And if you look back at history, this kind of capital, it's almost always the first to get positioned for the next big move.
All right, a minute ago, I teased that there was an asset that was quietly thriving through all this. While everyone's been watching stocks and rates and crypto volatility, a real traditional heavyweight has been making an incredibly powerful move. The silent winner here is gold.
I mean, the numbers really speak for themselves here. Gold prices have been consistently pushing towards and hovering near all-time highs, breaking past that $2,400 an ounce level. This isn't just some minor rally. It is a massive signal that there's a huge underlying trend at play here. Investors are clearly looking for a hedge against all this uncertainty.
So, what's behind this huge surge in gold? Well, it's really two powerful currents moving at once. First, gold is the ultimate safe harbor. It's where you go when faith in government-backed currencies starts to get a little shaky. But second, and this is the really fascinating part, it's not just regular investors buying it. The central banks themselves are stockpiling gold at record rates. They're hedging their own bets.
And this brings us to a really modern way of looking at an old debate. For years, the whole story was gold versus Bitcoin. But what the market is actually showing us right now is that they're not really rivals anymore. They're actually becoming complementary hedges for different types of players. Gold is the traditional systems hedge of choice, so much so that the systems managers, the central banks, are buying it.
and Bitcoin is emerging as the digital systems hedge, now being adopted by modern institutions through these new tools, the ETFs.
Okay, so let's put all the pieces together. We have high interest rates fueling a strong dollar, which creates a really tough environment for most investors. But underneath all that surface-level noise, smart money is quietly flowing into both the oldest store of value we know, gold, and the newest one, Bitcoin. So the big question is, what's your next move?
In a market like this, patience really is everything. Those high interest rates make cash look like king, at least in the short term. But the smart money, well, it's hedging its bets for the long haul, and it's diversifying into both gold and Bitcoin. So, it all comes down to this one question. For you, what's your move? Are you playing the short game with cash, the long game with gold, or are you betting on the new digital frontier with Bitcoin?